Okay, so what about the promised 5 high leverage pure gold opportunities? Well, here they are. One, seller finance deals are at an all-time high. Even back in the day, when it was very early in bizarre financing, when the prime went to 21%, and you couldn't sell a business without an extensive amount of seller financing to bring down the overall interest cost, because institutionally, you're going to be paying 20% minimum for your money and sometimes 25 to 30% for your money, which was outrageous. So the only way you could get your interest cost down were to get your seller's financing down around 5%. So that when you looked at your blended interest rate between what you were paying on the seller portion of the financing and what you were paying on the institutional portion of the financing, you were probably at 8 to 9% of the total financing as your interest rate, right? So you could live with that, okay? Well, today, even though the prime isn't anywhere near that high, and even though institutional rates are nowhere near as high as they were back then, there is more seller financing happening right now because of the boomer marketplace where there's more businesses on the market than there are qualified buyers. That's driving down the seller's interest rates and their willingness to finance an even higher amount of the purchase price. So you're going to want to participate in this seller financing boom and use it to the advantage of what you're purchasing. Now, why does it matter? With high interest rates and cautious lenders, so this is what you got out there right now. Sellers are increasingly willing to finance part of the deal to get it done. Especially true for baby boomer owners who want a steady retirement income. You see, part of the way that the owner of that business was a retiring baby boomer who was looking at another 10 to 15 years of life potentially without an income, having this debt amortized to them over all that period of time is not a bane to them. It's something that they now can look forward to, the fact that they've got this. Now they're going to want to be sure that you're a qualified buyer. You're going to have to demonstrate to them that you're the right buyer for the business. But then using seller financing, once they have faith in you, it gets to be a whole lot easier. So the opportunity here is to position yourself as a legacy partner rather than a buyer and use that goodwill to negotiate seller notes, earnouts, and favorable terms. Okay? That's what it comes down to, that you are not just a buyer, you're their legacy partner. You are the vehicle through which their legacy will live on. It's not going to be torn apart by some PE firm who's going to come in, tear it apart, break it into pieces, flip it, whatever they're going to do with it, because their only goal is money. All right. So that's really, really important. All right. Number 2, SBA 7(a) loans still offer leverage despite rate hikes. Why does it matter? SBA loans still offer 90% loan to value and long repayment windows. They make it favorable financing for the purchase of a business, even though their rates are still high, and if you don't mind signing the personal guarantee. In many cases, you can acquire a company with as little as 5 to 10% of the purchase price out of pocket, okay? Because you add in 90% from the SBA, okay, loan to value, and you leverage the seller for 10 or 15% of the sale price. Okay, you could actually end up with working capital in the company after your deal is done and maybe pull out some cash for yourself if you do it right. Okay, so still a great opportunity, guys. Still a great opportunity and should be weighed as a part of your decision making. And the opportunity is to combine SBA financing with seller carryback and a small investor group. And you can control a cash flowing business with minimal personal risk once you've done it right. And you've got extra financing in there to help you stabilize and carry that business forward. So again, this is just a phenomenal high leverage opportunity. Declining valuations in certain sectors. Okay, why it matters. Sectors like retail, commercial real estate, adjacent services, those are businesses that service the commercial real estate marketplace, and logistics are seeing valuation compression. As a result, this value hasn't been growing. It's been compressing due to recession and fears of cyclicality. Okay, but they're great businesses to go into, especially if you're applying all the techniques that we've been mentioning so far and all the other ones that you learn in bizarre financing. That makes otherwise great businesses undervalued relative to their real cash flow and cash flow potential going forward. And the opportunity is to acquire in temporarily suppressed sectors, then apply technology, rebrand, or diversify to drive new value and exit at a higher multiple, or live off the cash flow, whatever you want to do. but these present potentially great opportunities. Now, if the businesses are fatally flawed and continuing to compress in valuation for a reason that isn't going to turn around, then you don't want to go there. But that's part of what you're going to discern when you're looking at these potential opportunities. Number 4 is invisible gold mines, businesses without a strong online presence. Why it matters. Many 55-plus-year-old owners have never embraced digital marketing, automation, or even basic CRM. They don't even know what these things are. They've just had their nose to the grindstone building their business in the old traditional way and fearing any of these changes because they didn't know about them or didn't understand them. But you do. And you have the opportunity to go into those businesses and then turn them into gold mines. They're generating right now maybe 1 to 5 million in revenue with zero digital leverage. Well, what happens when you go in there and digitally leverage that business? The opportunity is to apply modern sales funnels, SEO, or even a Google business profile, and you can often double revenue within 12 to 24 months. What a gold mine is sitting out there with owners who have neglected this or feared it so that they've avoided it for the last 10 or 15 years. What an opportunity those are. And you should be looking for them. And you should be going into those AI platforms and putting in questions to help you understand which businesses out there this applies to, where you're going to find them, how you're going to find them, questions you should ask the seller. Have a conversation with AI, make them your partner in finding these companies. Okay, you'll be empowered beyond belief. And number 5, supply chain localization and made in America resurgence. Why it matters. Trade friction, tariffs, and patriotism are fueling a renaissance for U.S.-based manufacturing and services, especially in the technology fields, especially there. But you don't have to go there. You can go to any business, stuff made in India, made in China, made cheaply. There's a new orientation for the American consumer. First of all, tariffs are going to change that difference in cost. The idea that it has to be shipped from a far off place as opposed to made locally is going to equate the costs between the foreign made and the US made products because it costs a lot of money to get the products here in shipping and fuel costs and all the things it takes to get them here, plus time. Time is money. So the difference today between getting products made in China and India and South America versus here, that price differential is not as big as it used to be. And now there's this tariff issue adding more benefit to making it here. And the fact that people are patriotic in the new environment, they're willing to pay a few bucks more for an American-made product to keep the employment here. They realize that there's a second benefit beyond just getting the product. When it's made in America, there's the benefit of having more people employed, putting tax revenue into the government, bringing down their tax burden because they got other people that they're helping employ who are paying taxes. All right. So patriotism has an economic basis to it. And all of those things are coming together to fuel this renaissance in U.S.-based manufacturing. And you want to be a buyer of these companies and ride that wave into the future. Even federal and defense contracts are increasingly favoring U.S.-owned companies, right? And federal and defense, especially because there's the realization that if you have the product made in China, you got a security risk there if we go to war with those people and you can't get your defense products. And the same thing is even true of just helping to run the elements of the federal government. The idea that you don't want your products having a vulnerability to foreign adversaries. And even if they're not adversaries today, but who knows what they're going to be tomorrow. The opportunity is buying a U.S.-based small to mid-sized business that serves government, military, infrastructure, or regional supply chains, positions you for major tailwinds in procurement and funding. Why funding? Well, the lenders understand that you are going to be riding a wave of increased demand for American manufactured goods. They're willing to lean in a little bit over the normal numbers that they look at from past performance, knowing that future performance is going to benefit from government policy. All right, last chance to ask questions. Hopefully this has been an eye-opener for you that has helped you to identify where the wins are going to be, what it is that you can bring to a company that makes the difference, what kind of strategies and techniques that you might want to apply to these companies that you're going to acquire. I would take this orientation that you have today, and I would use this as an opportunity to go back over your webinars that we've given you over these many years, hundreds and hundreds of webinars that are in your library, and now look at those techniques and the methods that you've learned and think about how you'd apply them in these new situations and update the thoughts that you had from the past to how they might now apply to today and the future. And I think you will hopefully have found that today was a very valuable session in orienting you to how you look to the future, how you find a business that's right for the future, and how you can acquire that business and leverage its purchase.